Hello, traders. It's 8:01 a.m. Chicago time, 9:01 Eastern on Tuesday, the 30th of July, 2019. Don't you get sick of me just saying the same thing every morning except changing the day? Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode number 1566 today. The overall market stance this morning is risk off. We have a gap down in the S&Ps. The DAX is lagging is the laggard today. The DAX is way off, down 283 points. 283 points, down 2.28%. 2.28%. Today, as we come into an inflation rate reported in Germany that's higher than expected, but overall, the market stance is risk off as we head into the session. The leader today is crude oil. Crude oil is breaking a little bit higher. It's still in a consolidation, still trading within the range since the large draw from last Wednesday, still trading within that range, but has broken a little bit higher out of the 2-day balance or 3-day balance. Markets prepare for what is deemed the most eventful week of the year. Two more major central bank meetings and an expected Fed rate cut. Major PMI data from U.S. jobs report. U.S.-China trade talks also resume. EU GDP data miss expectations. France economic growth unexpectedly slowed in Q2, adding to risks for a euro area slowdown. Sweden misses two. Germany July state CPI data slows from month ago levels. EU July confidence data disappoints. Risks of a hard Brexit are rising. UK PM combative stance on Irish backstop sends GDP to a fresh 2-year low. So the party's on. So all these little inputs. What's interesting is a 10-year note is down a tick and a half, and the bonds are up a tick. The Bund is up a tick, which is kind of strange. You would think that money would be flowing into the Bund, but the Bund's had just a historic run already. The Dow's down 106, the S&P's down about 16 points, Russell is down almost 10, and the Nasdaq's down 63 points. So again, risk off today as we come in. Um, there was something else. So we do have some earnings today. We'll focus on a slew of results from major companies, including Apple, Electronic Arts, Amgen, and Gilead, which are scheduled after market closed. Bayer and Lufthansa are just whacking the DAX this morning. So just pay attention to Apple after the close today. In terms of what's ahead of us on the calendar as pre-scheduled, we do have the pending home sales at 10 Eastern. That disappointed last time, came in at negative 0.7, expecting plus 1.4 year on year. Month on month, expecting 0.5. And then after the close at 4:30, we have API crude stocks. Now remember last week it was way off. No expectation on this number. And then this evening for Great Britain, we're looking at 7 p.m. GFK consumer confidence. And then out of China, 9 p.m., we're looking for MBS manufacturing PMI. Again, the trade talks are supposed to resume today, so there may be some tweeting throughout the day today. What did we expect yesterday in our review segment? I actually need to cut down on the time I'm spending on that other stuff. What did I expect yesterday? The primary expectation yesterday is an attempt at the 2950 and failure with a push down to 3018 with potential push to 3015. 15, that stock zone there. That was what was expected. A try at the high, this week high, and then I expected resistance and I expected it to fall back in and stay in line. I expected a fight at the 21-22 area. That was a key area that I outlined. Again, 22 was the high from last Wednesday, and it left us with a low volume node on a double distribution on Friday. And so this is a key area dividing the upper and lower distribution of Friday. Here's what actually happened. Just a choppy, um, boring ass day yesterday. It never made an attempt to go higher. Note that it opened at 30.26 and it went to 30.2650. That's it. Not, you would expect that it would show some sort of a drive, but it didn't. It had an open auction in range. It traded back and forth before the selling came in, pulled back. Notice the initial selling stopped at 21, pulled back to 23, which is the opening swing low. So a lot of structure here. Short-term traders likely to be in control. And then we push into 1550. This is a pre-existing stock zone from yesterday, as you saw in yesterday's image of the video. And then it pulls right back to the 21, holds steady here and starts to squeeze a little bit before we end up having this completely balanced session. Yesterday was kind of special. As many of you probably know or have guessed, the market breaks the first hour's high, the IB high, the yellow line, or the first hour's low, the IB low, um, about 98% historically of all days tested. So we generally break those, and there are some interesting reasons that have existed since Peter Stadelmeier came up with this in the 1980s, mainly because a lot of business, much of the day's business is done in the first hour. You can see this by just looking at a 15-minute bar chart and putting up a volume histogram. You can see that it just comes out strong and then it drops off after an hour. So generally, the S&P will break this, and historically, the S&P will break this 98% of days. Yesterday, it didn't. Yesterday fell into the 2%. Yesterday, just coiled and 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 coiled. Very choppy. I saw a couple of opportunities, one right here, a couple of opportunities for it to actually pull back, break down, and then I was shooting for the IB low to be broken after these multiple lows. The risk on this trade was that it's being initiated against the point of control, the middle of the noise, but it looked like it was having a hard time getting higher with a small delta divergence occurring back here on the retest of the high at 24. And so it was worth a shot to see if we can break this local triple bottom at 20 and break this down and start heading towards that IB low. That trade took an hour and a half, and then it ended up just stopping out, just total garbage. But the trade was okay. It was an okay setup given what we had, and overall, while price maintained up here, the delta was really selling off. We had some strong selling into the close. Here's the delta chart. You can see that this yellow here, are 100 lots or more um, consolidated, 100 lots or more. And you can see on the close that there was just a ton of selling from very large lots and large lots, while small lots were short through the whole session, or net sellers through the whole session, and bought some of those up, probably to cover some of their exposure. But there was a lot of selling into the close, causing the delta to drop on the end right here. So there's a fair amount of selling while price stayed steady. There was a fair amount of selling going on into the close. Okay, so from there, where is hang on one second. Let me find my overnight chart. Yes, overnight. Strange, it's closed. Sorry, it's loading. Come on, baby. Here's the overnight session. Really tight, relatively tight day session yesterday. By the way, volume, wow. Volume's off by like 40% or so, 45% yesterday. Really, really lack of participation. But hey, it's the middle of July. Most people are on vacation. A lot of people are on vacation. Overnight, we push through that high at 30.26 and a quarter, push into 27.50. And then from the time the Europeans come in, which is about here, we've been sellers. And you could see that the discovery has been pretty healthy. Good volume, multi-distribution profiles, a profile uh, throughout the session, weakish low. The expectation is we're likely to dump out. The session spent, the delta is negative, and in terms of price, the inventory is somewhat mixed, more leaning to the short side coming into the open. But we did spend a fair amount of time or a fair amount of the session above the close. And now we are short. The inventory is short, and so to me, I'm going to be favoring the short side coming in today. It could potentially have a bounce up and push higher. But overall, I expect that sellers are likely to dominate the play today. I'm going to show you the market depth through CT Bookmap. Again, you can always find us at ctbookmap.pro. Um, Looking at what we've done, let me make this monochromatic. That's strange. Okay, so it's since the close, you can see the close here had, well, yesterday's session was just a lot more volume and so on. But looking at the order flow, really noisy session. The 30 the 3009 and a half area is interesting today. Want to pay attention to that 3010 or so. We are currently trading 3675. And then from below, I'm not seeing too much where it looks like we're free and clear into 3000 this morning. And I'm going to look to lean somewhere between 10 and 12 into the short. The overnight point of control is at 15. Not seeing liquidity supporting either direction. If we go to the full depth, and this is a full depth feed here, you can see that it's fairly sparse down into 29.75, 29.70. Not much to lean on in terms of liquidity. To me, it looks like there's likely to be a lack of participation today coming into the session. So just again, take it easy. It's summer trading. It's not really worth the extra risk if you decide to get aggressive. So looking at today, what am I expecting in terms of the key trade figures, key trade ideas? So we're opening below Friday and Monday's lows right here. So we're opening below the 2-day lows. We're opening in the point of control of last Thursday, and we have an MC point of control underneath us right here, this black line at 97. To me, it looks like well, let's see, the point of control has shifted down to 3,775 actually, so that's good. So it looks like it's an open auction out of range. I expect some sort of an attempt to revert back. I expect some resistance in 3009 through 3012 right in here, this zone right here. I expect some resistance here. I'm looking for this to roll over, take out the overnight low, and then start working itself down into that 3000 and 29.97. 29.97 being the key balance price or the key test price for today. So I'm going to be looking to short an attempt up, playing in the direction of the overnight of the overnight play. The secondary is one that just opens with a downward skew, starts moving lower right away, takes out the overnight low, pushes towards 3,000, 3,000, consolidates in here, and then potentially pushing into 29.97 before we see a bounce back up and finishing in what is a kind of an island day where we have a gap zone remaining above, and we've tested 29.97. This is what I'm looking at. Now, given that volume has fallen off quite a bit and it is summer, there's a potential for an open test down, drive up. The open drive is going to be looking for a 3015 target, 3015 target resistance, and then a potential for a push back in towards 3018, 3020. That would be scenario 3. Not the most likely scenario. I'm not expecting a feverish buying spree here. I really am expecting it to balance out the overnight inventory if it has any buyers in it. I mean, coming in, we might see some buyers kind of step in and push to offset what happened in the European session. So I'm looking for scenario 1 to come back into 3009 to 3012 before there's resistance. So I'm going to be watching very carefully. Again, I would recommend that you don't trade the first 20 minutes to a half hour. Let the market set up, let it shake out the weak hands, let it show you what it wants to do. You have the rest of the session to do something with. You don't have to participate at the very beginning. The only time it hurts, really, for us traders not to participate at the open is days like we saw last Wednesday where it just opens, runs off. But those days generally give us a pullback to trade with or something. You know, there's just the risk reward of getting involved in the first 20 minutes or half hour. To me, in my opinion, it's just not worth it. It's just not worth it. Let the market tell you. Let the market come to you with what it wants to do before stepping in and putting your hard-earned cash in stake. Okay, so I'll leave you with that thought. Good luck today, and I'll catch you tomorrow. Take care.